Hello viewers, we'll be going over the S&P 500 ETF ticker symbol SPY. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and we'll examine the current trend with the trend in the past, and we'll go over the day-by-day forecast for the S&P 500. So back to the technical analysis, we're currently up 1.2%, and on the 1 hour chart, we were oversold on the RSI yesterday due to a very large downward selling pressure, and we did manage to close above the 300 price target on the SPY, so that's a positive sign that the uptrend is still intact. There's no reversal, so do keep that in mind. And as for the 4 hour chart, we found temporary support on the 150 moving average on the 4 hour chart, and we're still near the oversold level. We have not seen a convergence yet on the MACD. And if we expand that further onto the daily chart, we are resting around the 200-day moving average, that is green line, and we're also resting on the 150-day moving average here as well, this orange line. So we are currently on pretty stable support level, and we also have previous resistance level around this range as well, that even dated back to May 26. And since we're slightly above that resistance level, that act as our support. However, if we do manage to break the 200-day moving average, the next possible support level will be around the price of $296.50. We see that range as our previous resistance level that dated back to May 20th. And that also coincides with the 50-day moving average as time approaches, and also the 100-day moving average, this orange line. So that will be our backup support level if we do break the 200-day moving average. And now for resistance, if we do manage to reverse higher, the next possible resistance is the price of $319.84. And we did have a gap down between June 10th to June 11th that will act as our resistance to the upside. And if we were to move up higher, that price movement to the upside is roughly around 5.3% to the upside, and to the downside, to hit support, that is roughly around 2.4%. So now let's examine the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 50% chance for the S&P 500 to climb higher between 0 to 2.6%. And on the extreme case, we also have a 50% chance for the S&P 500 to climb higher between 2.6% to 5.2%. So now let's examine the day-by-day forecast for the S&P 500. So we have 1 day out. That will be a Monday, and 2 days out will be a Tuesday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. We have our current trend as a blue line, and overlapping it happens to be the best match to the current trend. So we have our current trend right here, and below is the trend that we found on the line graph. And this trend dates back to July 8th, 2009 to October 1st, 2009. So let's begin comparing the both charts. So on the current trend, we start off at the bottom Bollinger Band, we average above the middle Bollinger Band, and we revert back to the middle Bollinger Band, once more touch the middle band again, and then we average above the middle Bollinger Band, and then towards the very end, we revert back to the mean or back to the middle band. And in the trend in question right here, we see a similar pattern at the start at the bottom Bollinger Band, average above the middle Bollinger Band, revert back to the mean to the middle band, once more again, and then average above the middle Bollinger Band, and then towards the very end, we did touch the middle Bollinger Band. So what we have here is 1, 2, 3, 4, 5, 6 points. We also have 1, 2, 3, 4, 5, 6 points here on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly same. So the model that we just examined was again back in July 8th to October 1st, 2001, or 2009, excuse me. Back then, the S&P 500 was up around 4.4%, And if we head back to the day-by-day probability model that coincides with this standard deviation, 50% chance between 2.6% to 5.2% in the next coming days. And let's examine closer on the technical performance of each model. So on the current trend, we're currently down 6.5% from monthly high, up 27% from monthly low, down 2.8% from 10 simple moving average, down 40 basis points from 20-day simple moving average, and up 4.7% from 50-day simple moving average. So now let's examine the trend that we just found on the line graph and compared it with. So back then it was down 4.2% from monthly high, up 15% from monthly low, down 2.5% from 10 simple moving average, down 2% from 20 days simple moving average, and up 66 basis points from 50 days simple moving average. So among the two trends, there are some similarities and differences. So biggest differences is the 50-day moving average. Back then it was only up 66 basis points. Compare that to the current trend we're in, up 4.7%. And really also the 20-day moving average down much lower back then, down 2%. Compare that to our current trend, only down 40 basis points. So again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.